You tell me when we're live.
Yep. We're live.
Welcome to Wisdom to Wealth. This is episode number 5, and thank you for tuning in to us. Just give me a second here for technology. Okay, all set, I can see. So thank you so much for joining us today. I'm Whitney Hammond, and I am the owner of Sovereign Wealth Management in Burlington. And Theresa Pellizzari is a financial security advisor with Sovereign Wealth Management. She's here today for both of us to give you tips in Wisdom to Wealth. Hi, Theresa. How are you today?
I'm good. Hi, everyone. Thanks for joining us at the end of the week.
Yes, it's Friday. It's Friday. If somebody thought it was Monday today, but anyhow, so no, and you know what? People are asking me who this is on the ceiling, and this is Johnny Depp. And I'm in my daughter's bedroom, and of course I don't have to be in this room, but I've set my office up in here, and I absolutely love it. So I'm not moving, and she doesn't want the poster down. So she's 30 now. Anyhow, whether you are just getting started in your investment life, or you're already working with a financial advisor, or you're trying to do something yourself, Wisdom to Wealth discussions provide a roadmap to the life you want and deserve. Our mission is to teach you how to gain control of your money so that money doesn't control you. So before we go into the questions, we have a lot of people writing questions into us. There were a number of questions that came in right after the show, so on Wednesday. So what I want to do is I want to address those first. So the first one is from Joanne Fluke, and she asks, what are the best things to buy right now? She's looking for a quick turnaround. So that would be a stock market question, but I'll expand beyond that. So anyhow, Warren Buffett has a saying that the best time to buy is anytime. So, and that's his philosophy. And really, in a way, buying, if it's a long-term situation, any time to buy really is a good time. But people look for opportunities, and this is the time. It's the same thing in the real estate market. When's a great time to buy? If you want to buy a house, buy it anytime. But you know what? When the markets go down, it's the best time to buy. So right now the stock market is down. It has been creeping up every week. So anybody who's been investing in the last 3 weeks, they're making money. So she's asking, Joanne is asking for a special tip. So I'm not going to tell you a specific thing to buy because there's so many right now. Believe me, there's a lot. But one of the things I want to let you know what Warren Buffett did before this disaster happened is that he invested $10 billion in the oil market. And then it was decimated. Like, we almost need to charge to store gasoline at our house because nobody's using it. The whole world right now is not using it. So so there's 2 issues that are going on right now, and one of them is an oil issue that has nothing to do with COVID, but it's been it's been magnified by it. So there's lots of good deals to buy for sure right now, and it's almost that you could throw a dart at a dartboard. Usually say that when markets are down, you can whip a dart at a dartboard and just pick. Anyhow, so, but any individual advice, we'd be more than happy to provide that, and Theresa too. Second question is, it's around the buckets. So the bucket savings plans that I talk about, having a short-term bucket, a medium-term, and a long-term bucket, we get a lot of questions around this. So I may not be explaining it properly, or people want me to go back into it deeper. So with the buckets, the question was, should every savings bucket have its own account, and what kind of savings account can earn interest? So my theory with the buckets is yes, you can have separate buckets. that's why we do them. And so in the buckets, I usually say if you have a short-term bucket, a medium-term bucket, and a long-term bucket, and you may have 3 short-term buckets, and yes, they do earn interest, and it depends on what that money gets invested in and what the time is. So the first bucket would be just your emergency bucket, which could be just a separate bank account. I can tell you that money attracts money. When you start saving, more money will appear. It's just this energy thing. It really does work. So if you take the time to set up, I want to have a short-term savings bucket for an emergency. I want to have another one because I want to save up for this. And I want to have a medium-term bucket because I want to save up for, who knows, it's a trip in 2 years, or it's a wedding, or you just put a name on whatever it is. And then, yes, these buckets do earn interest. So one of the buckets you can have too is a tax-free savings account. And right now, instead of buying fixed income, you could buy things that are balanced or equity because they're actually generating returns. And again, we can help you. You don't have to work with us, but we can help you to put those buckets together and put the names on them. So once you start putting money into these little buckets, you'll see they'll start growing. This is how people get rich. They just don't do it overnight. They just don't wake up one morning and say, oh, hallelujah, I just hit the mother lode. They take time to diligently save money and plan, and that's how it works. So Theresa, there was a bunch of questions, and I'll let you start with, I think we might only get 2 of them done. We'll see.
Yeah, for sure. And Whitney, when you're talking about those buckets and the timeline that it takes, it's like growing a garden. And we're all thinking about getting outside and growing our garden right now. It doesn't plant the seed and then automatically overnight you have tomatoes. So you just have to keep plant it, get started, and water it, nurture it, and it'll grow. So over to the questions. One of the questions that came in is, should I invest in individual stocks or in mutual funds? And is there a time for each one?
Okay, so first of all, for people who don't know what a mutual fund is a basket of stocks. So it's a basket of goodies, and there's probably 8,000 different mutual funds out there, and there's also funds of ETFs. There's a lot. So a stock is an individual purchase of a share. So for example, I like the TD Bank. I believe in the TD Bank, so I'm going to buy some shares of TD Bank. How do I do that? Well, really, if I'm just going to do a one-off like that, the best way to do it is to open up a discount online brokerage with whoever you bank with. They all have them. And you can purchase that stock online. And there's a fee to purchase it, and it depends on what the brokerage deal is. If you're a discount brokerage, there's different types. So you'll pay that fee to purchase that stock. If you have lots of money, you can come to a stockbroker, and the stockbroker will pick that basket of goodies for you and charge you an annual fee. And that will be somewhere between 1% and 2% per year. Nothing is for free, okay? You buy a GIC, there's fees on that too. So mutual funds are a basket. So you may have 50 stocks in that basket, or you may have 20, or you may have 100, and they have sectors in there. So they'll have a banking sector, an energy sector, utility sector, and you can buy them by risk. So you can buy low risk, you can buy medium low, you can buy medium, and you can buy the higher risk. So what else did I want to say about that? Yeah, and the mutual funds, they also have a fee too. So there's a fee inside the fund, and it's embedded. The fees are pretty low today. Everybody's lowered their fees. So, you might have like a 1 3/4 fee, or you might have a 1.4% fee, depending on what the fund is. If it's more actively managed, the fee will be a little bit higher, but you don't pay that. That just comes out of the net of your returns. And what I mean is you're not writing a check for it. And beware of buying cheap stuff. Okay, because it's showing right now. If you have cheap stuff, the returns are really bad. So buy something. If you are going to buy a mutual fund, buy something that has a 10-year history or more, and you can see how that investment has done over the last 10 years.
Good. Well, Whitney, we only have a minute left. So I'm wondering whether you can expand on, is there more risk or less risk with stocks versus mutual funds?
Okay, well, there can be more risk with a stock because when it goes down, it can really, really go down. But with a mutual fund, they only hold 10% maximum of one stock. So for example, if we use the Nortel example, if you purchased Nortel on its own, it actually got delisted and you lost all your money. If you had it in a mutual fund, only 10% of that fund held Nortel. So your fund may have gone down a little bit for, it got out of the market fast and it moved on, but the individual holders lost out. So again, if you're looking for a lower risk, the best way to do it is to go in with mutual funds, and then you don't have us picking and choosing and deciding. We have professional fund managers that are making those decisions, and they're buying and selling on a regular basis, and they come out. Right now, the vultures are out because there's a lot of stuff that is undervalued and underpriced right now. So we will get back to the rest of the questions on Wednesday. We almost seem to need to do this more than twice a week. Maybe we will. Keep those questions coming. And I'm sorry, I'm not watching live right now, so I'll have to answer anybody's stuff afterwards. Have a great weekend.
Yes, everyone. Enjoy your weekend. See you on Wednesday.
Thanks, Theresa.
Thank you.
Okay, we'll see you.
Ciao.
Bye.